Good morning. It's Saturday, February 24th, 2024, and this is the Wall Street Weekly Wrap Up with your host, John Newquist. The king of semiconductors, NVDA reported, and they did not disappoint. Let's get into the week that was. Well, we're going to start with one of our favorite companies in the portfolio, Walmart. We're going to get a 3-to-1 split. They raised the dividend. They beat by 16 cents. Revenues rose 5%. Not bad. Pretty good thing. They've got a lot of things they're doing right. I think they're better than Target or a lot of them. We also have Kohl's as our retailer. But overall, a good chart. If you can look at it, ever since mid-February, the charts have lined up, and now we're doing good. Good upward trend, you can see. Let's get into the king. NVIDIA beat by 50 cents. Revenues rose. I bolded. I don't ever bold anything. 265%. This is a trillion-dollar company. It's incredible. It's incredible. How do you have that happen in such a big company? It's just amazing. So when we talk about Apple had 4 straight quarters where they didn't gain revenue. This is incredible. So beat on revenues, beat on everything. Guides next quarter above consensus. 516 per share. Data center up 27%. Holy smokes. 409% from a year ago. AI analysis of data is so important. Coming with the software, everything. So $12 billion for the quarter they made. That's Exxon level, that's Microsoft level, but this is pretty good. And of course there's going to be competitors. But you got these data centers coming out now. They've got the chips lined up now. They'd like to make their own chips, and that's what's going to happen. But right now you're taking the NVIDIA chips, and the demand from the U.S. side is just huge. So pretty good. And again, other things. You got to go back 4 years before OpenAI came out, and it was gaming chips and automotive and professional chips for like data mining and things like that. And that's such a small percentage compared to these AI data. So no real competition. The demand is there, and we'll see. Wow. And again, the indicators. Big thing we're all watching is oil. Oil's up at $76 a barrel, and that's going to be an issue if it can break 80. A lot of people predicting $100 oil in the summer. That's good. Why would it happen? U.S. is chugging out 13 million barrels a day versus 9 maybe a few years ago. That's got a lot of flood. It's like they said, drill baby drill without drilling. It's like they're punching the capacity. They're adding new wells. They're buying other companies, so pretty good overall. I just put the Palladium chart just to give you an idea. This was the metal. They were using the catalyst. And if you hold Palladium, wow, you just lost 50% over last year. Just a brutal downcline because of the new electric vehicles won't use Palladium. But I think it's going to be written off too soon. So, I always say that's not a bad price if you're going to get into nickel and Palladium. And the averages, look at this. S&P's leading the way. We had a new high for the S&P. Dow's had a new high. I haven't put the Dow chart up here, but look at this thing. Again, you bought at the November trough. That's what they're calling it. Lower, higher lows, higher highs, higher highs. That's a good chart. That's what you like to see in a chart. So, again, a lot of people said, oh, market's going to, got to remember, when you watch it come down here from August to November, a lot of people were out of the market. Oh, it's going to crash. It's finally going to give up all these gains, blah, blah, blah. We're in it because the earnings are good. Interest rates are still low. I don't care what they say. I know if it's a house and you got to say, I got to pay $500 a month extra, it's a different animal, but it is cheap. And Amazon is added to the Dow. So guess what? At almost all times high. Look at this thing. What a deal. Uber is a company we're going to have to look at, this thing I think came out at 90 on the IPO, or got up to 90 on the IPO. Then it dropped all the way down to 30 because of the debt. They got a lot of debt. And that's one thing that's always bothersome about Uber, is that they're trying to expand. They're trying to get the world. And one of the things you got to start sometimes thinking is, if you wanted to make an Uber worldwide, how would it even start? Wow, you'd have to have almost $10 billion to start out that. It's just incredible because you just don't get drivers instantaneously because you started a new company. So, they're going to take out JetBlue, which is just a small airline, but it was a darling. It was going up a lot, but this is going to be much better. So we're going to have to start thinking about Uber as a play in the future. It's in the upward channel, as you can see, since November, like many other stocks were in an upward channel since November. But we'll see. Does it pull back? Well, I don't know. But, you think about it. It's a double for most people, if you hang on. Home Depot, we always watch Home Depot because it tells you kind of like the housing market. Revenues fell. That's not a company we would own. Remember? We want companies that can grow revenues. So what we're telling us is that working on your house got a little bit slower last year. Is it going to be slower this year? But we want to see a good quarter before we start thinking, oh, the home builders are going to take off and everything else. Increase the dividend, share buybacks, all that stuff to kind of prop up the stock. But it does well. But again, the revenues are flat. And what they've got is product, and they're not thinking about how to increase revenue. Palo Alto. I was here, Jim Cramer, for years, talking about how great Palo Alto was and everything else. Revenues rose 19%, so don't think it's a bad stock. It's cybersecurity, but look at that drop. Holy smokes, $300. What is it down to? 240 and 250. That's a big drop. That's a big drop. And if you're a shareholder and you bought that because he listened to him at the high, you're in a lot of pain. That's a pretty big haircut. So, I like cybersecurity stocks. But, you think about it, they had a November low that wasn't very low, and they jumped up, and then they've dropped. This is what a lot of people are starting to worry about. Are we going to get, guidance below and missing estimates and things like that? Are they going to guide? Again, I always look at cybersecurity. How much are you going to get paid before you go sit there and find somebody else? That's an issue. To me, they're kind of like all the same. Commercial real estate, Financial Times, overtaken loss reserves. Well, that's always been the case. We're not all going to fail at one time. But this is, I've heard commercial real estate collapse forever. And we really haven't had it. I've seen it in China. I'm watching these places that sit empty and everything. We got it here, but I also still see new places opening up, small businesses still opening up. So it's a little bit better here. But again, banks are exposed. 153 regional banks. Well, there we are. They're going to have an issue, and some will go down maybe, some will survive. And then I always watch manufacturers because, I always want to have at least two manufacturers, and we do. But Trinity Industries did pretty good, 35% revenue. They make rail cars. That's a pretty good thing. Now, of course, the stock chart is just choppy. Up, down, up, down, up, down. And then, of course, after the earnings, the people don't like it. But I'm telling you, this not be a bad stock if it gets down a little bit lower. It's 26. If it gets down to, let's say it gets down to this low, I would think about buying it. Because you're getting a company that is doing well. If the economy grows, rail shipment will be up. Rail car demand will be up. And that's not hard math to do. Again, the question is, wow. But I says, well, if you can buy it down to 21, let's say, and it goes to 30, that's a nice prop. That you got, pretty good 30-some% increase. So think about it that way. It's not a bad stock. It'll pay a dividend. We're looking at it. To give us an entry point on a company that makes and increases revenues, we're going to look at buying it. So, again, we didn't buy or sell anything. We're just watching the market. Everybody's waiting for NVDA. Now it's going to slow down a little bit. The heat map for the year to date, you can see, boy, the bright greens. NVIDIA, we're up here. Meta, we're up here. If I had ARM was in the S&P 500, ARM would be up here. So Taiwan Semiconductor would be up here. The only one we don't really have that jumps out is Lilly, but Lilly's been high priced, and it's one of those stocks. It's been high and expensive, and maybe they have a bad quarter and drop a lot. We have the competitor, Novo Nordisk, so Ozempic, which is the number one. So getting after number two, it's okay. We can miss. We're still in the area. We're in the play. We've got one of the best. We know it's good. It's got a heck of a demand, and we know we're going to be a good 2024 for Novo Nordisk. Look at the oils. ExxonMobil, Chevron, Conoco's a little bit down for the year, but you know, they're hanging in there. And of course, look at the worst of the Magnificent Seven is Tesla. Wow. Well, you know, like I said, I think Elon's too focused on Twitter, less focused on his other industries, and it's hurting him. You cannot run 120 hours a week and try to run all these businesses. You need to start sitting there thinking, maybe I ought to give up the social media, but maybe you can. You know, there's addiction in everywhere, so that's a problem. And again, I think Tesla's suffering from it, and it will continue to suffer for it. It's not what he says, it's just that he's not focusing time. He's not focusing time. It's running, but it's not running. The innovation's a problem. Electric vehicles are kind of at a tipping point. I saw Mercedes this week say, our plan is by 2032 to go all electric Mercedes. They scrapped it because people want hybrids and then combustion engines and then electric. So that's, you have to remember, that's the priority. So hybrid vehicles, the future. Combustion engines are here to stay. Electrics, it's nice, but a lot of people will not buy them. All right, have a good week. Enjoy it. Stay warm. I don't know why we went down to like 20 degrees, 15 degrees today, but it did.